And we're going to have a good conversation today. I want to actually talk about a debate that I consider to be a pretty important debate. I think it's worth weighing in on and kind of processing this a little bit. It has to do with real estate and what kind of investment real estate is. I heard some comments by Grant Cardone, who's a wealth expert, and another guy by the name of Vlad from Vlad TV, who seem to feel that real estate is pretty much a scam. They seem to feel that things like home ownership, stuff like that's just something you should never do under any circumstances. That it's always a bad idea to own a home. That no one should ever buy a home. Things like that. And I'm gonna just start definitely from the beginning by saying in finance, any absolutes that you hear, like never do this and you should definitely not do that. 99% of those absolutes are false. Most things in finance, and I'm just gonna say this because you guys know my background. My background is is in finance, and I've been teaching college students for a long time. I agree. I agree with you, John Doe, and I'm gonna clarify that point. Grant Cardone says nobody should ever buy a home, meaning a single family home that's not producing income. So Grant Cardone, and again, I want to make sure I start this video also by letting you guys know that this is not, a hit piece or a diss video. I respect Grant Cardone. I mean, the man's made a lot of money. He's invested in a lot of different areas, and he's a smart guy. Same thing with Jay Morrison. Jay's a friend of mine, actually. And then also even Vlad from Vlad TV, who interviewed Jay. And it was a pretty contentious interview, where they were sort of debating whether or not real estate investment makes sense, or if you should do it or shouldn't do it, stuff like that. And I thought it was a really interesting debate. I watched it again this morning, though, in its entirety, at least the first one. And I thought about it, and I said, this is very fascinating to watch because I think there's some things that we're missing in this whole debate. And I think that I can chime in a little bit, mainly because when you get a PhD in finance, you're kind of like a financial scientist, meaning that it's like if I'm looking at this bottle, somebody who has been drinking bottled water their whole life, maybe even manufacturing bottled water, would say, "Oh yeah, I know all about bottles and bottled water. Some of them are made of plastic, some are made of glass, some are shaped like this, some are shaped like that, some are made of this material, some are made of that material." But if you're a scientist who studied the molecular breakdown of plastic and the chemical compounds that came to create and form the very essence of this plastic bottle, you see it in a different way. You see it, you see things in some very interesting generalities, but that they give you insights that can help you solve really complicated problems. And in a way, that's kind of how I end up seeing wealth and investing and all this other stuff. And so actually, before we get started, do me a favor, hit the thumbs up button. Please hit the thumbs up button. Also, shout out your city, shout out the city that you're from. Now, Donald says that Grant was speaking from a white point of view. That's true to a point. And Vlad's not black, right? I like Jay Morrison because Jay's a fellow black man, and I respect a black man, doing things for the black community. And I also reiterate my point to you guys that if you're gonna go slam the Tulsa Fund, which is what Jay put together, first black-owned crowdfund or equity crowdfund to raise millions of dollars to make real estate acquisitions. If you're gonna blast the Tulsa Fund, give them time to make a mistake first. Give him a chance. Just give the brother a chance. Let the fund exist for 2, 3, 4 years. Go find some white people to attack. There's plenty of white businesses out there robbing you blind, taking all your money, setting you up, selling your bullshit. No, seriously. I shouldn't cuss on a Sunday, but y'all know what I'm talking about. Tell me if you understand what I'm saying. If you get what I'm saying, just say I get it. I know what you mean. It doesn't mean that you can't have stuff happening in the community that isn't quite there, but the problem for being a black businessman is that you're gonna get a level of scrutiny sometimes from your own people that will not even let you get off the ground. Like you can't even make a mistake before they're accusing you of making a mistake. It's like being a basketball player and the coach accuses you of missing the shot before you even get the damn ball. You're like, damn, just give me the ball. Let me take 10 shots. If I get 10 shots and I miss 8 of them, then we can talk. But you ain't let me take a shot, man. Come on. So anyway, and that actually links to the point that I want to get to with this. So hit the thumbs up button, by the way. Please hit the thumbs up button. Hello to everybody on the Black Financial Channel. And I see Dallas and Charlotte and Richmond, Virginia. And I see a lot of cities in here. Bryant is from Romania. That's really cool. North Dakota. Aaron, I bet you're the only brother in North Dakota. I don't know any black people in North Dakota. I ain't gonna lie. Anyway, let me keep going, guys. I'm just messing with you. Glad you're here, brother. Glad you're here. All right, so here's what my breakdown is. I listened to Grant Cardone's interview with some guy where they were talking about real estate, and he was saying never buy a house. And I heard his argument. His argument seemed to center around the idea, his belief, which might not be totally inaccurate. I'm not saying that's wrong. I'm just going to give you some ways to look at it. I give you tools for analysis. I don't tell you what to think. I just tell you, I give you tools that you can use to think for yourself. That's my goal. My goal is not to think for you. Basically, Grant was making the argument, it seemed, that banks created, this idea that, buying a home is the American dream so they could sell a product, so they could, convince you, hey, you should come here and rent your money from the bank, get your money from the bank, pay us interest so you can go buy this house because owning a home is the American dream. And he said, and by extension, he makes the argument that this leads you into what he considers to be a scam because a home is not an income generating asset, among other things. I think Vlad actually mentioned that point, and I don't think Grant said that one. But basically, that there's no reason to own a home, especially a single family home that's not generating income, and now Grant is an avid real estate investor, but he's the guy that'll, buy an apartment building and get income because he's renting it out to other people, things like that. And I heard what he's saying, and it's not out of the question at all. I mean, marketing happens everywhere. Marketing exists everywhere. Grant Cardone, I don't know what he charges exactly, for the things that he does and things he teaches and stuff like that. But, he charges a lot of money, right? He wouldn't be able to charge that much money if he were not marketing himself, if he were not doing exactly pretty much what the banks do, telling you, listening to Grant Cardone, taking a class with Grant Cardone is going to help you achieve your goals. Grant Cardone is the American dream. Grant Cardone he'll help you achieve the American dream, right? And it might be true. I'm sure he's got lots of testimonies of people that'll say, yeah, I took Grant's class, it was awesome, etc. But, I think that we have to sort of get away from the idea that we believe that anytime a company markets a product that it's automatically a scam. Right? Marketing by design, if you look at the history of marketing and how it was influenced by Sigmund Freud's nephew was one of the early marketers who really got Americans really consuming lots of stuff that we don't need. And he taught, he basically delivered all his research on the subconscious mind and how to do little things like how to get women to see the cigarette as a phallic symbol. And to see smoking cigarettes as a way of taking away the man's penis and accumulating power. So the feminists all started smoking cigarettes because they thought that they were convinced that smoking a cigarette and buying a cigarette, mind you, was their way of sticking it to the man. Right. So this sort of marketing happens. It's happened all the time. Diamonds. How do we get to the point where we believe that buying a diamond for a woman we love is a way to show her that we love her? Right. Well, it's because they had campaigns. One of the most successful marketing campaigns of all time was "Diamonds are forever and ever," and then they put it in a James Bond movie and immortalized it. Next thing you know, 30 years later, people feel that, women feel that, well, if he loved you, girl, he would buy you a bigger diamond. Or women get engaged, and the first thing that their friends do is say, oh, girl, let me see the ring, right? And if it's a little cheap, scrawny, ugly ring, they're going to be like, girl, he must not like you. He must not love you, right? But the smart women are the ones who are like, save the money on the diamond. I need you to help me make a down payment on that house, or let's go ahead and launch that business. That's what a lot of savvy black women are doing. Sisters, holler if you hear me. If you are in that category, let me know if that's who you are. So not that you don't want shiny stuff, not that you don't like the jewelry, but you're a little bit of a deeper thinker, and I respect that. That's why you're here, because this is not a platform for everybody. It's a platform for intelligent black people. Now, With that said, we know marketing happens. We know marketing matters. We know marketing does not imply that the product is automatically a scam. Marketing must occur in order for any asset to have value. Any asset anywhere must, a couple things that inflate the value of that asset are either marketing and convincing the consumer that they should want this thing, or easy access to capital. Lots of lending in that arena to boost up the prices, because when people can borrow money to get an asset, they're going to bid higher prices. Well, the market price of an asset is determined primarily by what somebody's willing to pay for it. That's it. Not what you think it's worth. It's like a relationship. If I tell you, if I'm mad at my woman, I'm like, well, girl, do you know how many women out here would want a man like me? You lucky girl. You need to be glad you got me, because I help you cook the food, and I bring home the bacon, I take care of your kids, da da da. Right? Well, she may not believe you until she sees some other pretty woman down the street who's looking at her man saying, "Ooh, I'd like to have that man in my house," right? Then she's like, "Wait a minute, oh, maybe his market value really is what it is." I remember I heard a lady, I remember a lady told me one time, she told me about an affair she had on her husband, and she said that sleeping with another man made her husband want her more. And I said, "He wanted you more? Like, how did that go?" She said, "Well, because he was excited about the fact that a man of that caliber was attracted to his wife, and that helped him realize what he had." Right? It's sick, it's crazy, it's weird, but it happens, right? So the same thing is true with the market value of an asset. Like if you're trying to get a raise on your job and you tell your boss, "Well, are you only paying me 45 and I'm really worth 70? Well, the best way to prove it is to go get an offer for 70, put it on his table, and say, "I got this offer. I might go take it. If you don't want me to take it, you need to match it. If you don't want to match it, that's okay. I'm out. I'll see you later." Okay. So with that said, that's where market values come from. That's true with stocks and bonds. That's true with real estate. That is true with a college tuition. That is true with Gucci bags. That is true with fake booties. That is true with pretty much any asset that you buy. The market value is pretty much shaped by what people are willing to pay for it. Now, Will says the sound. Did the sound go out? Can you guys hear me? Holla if you can hear me. Let me know. Give me a yes if you can hear me. Yes or no. Yes or no. Can you hear me? Okay. I see you guys on Instagram. My Instagram's The Real Boyce Watkins. Okay, I see Mary says yup. Okay, Mr. R says yes. Okay, thank you, Anthony and Romana and Michael and Showtime. Okay, good. Looks like everybody can hear me. So I don't know what's going on with your sound, Will. You might want to check that. So I'm going to say this. I'm going to start with this key point to some people in here. So some people get mad. They think that I'm like beating around the bush and not getting to the point, when actually what I'm doing is I'm getting to the point. I'm just getting to the finer points, the subtle points. It's the subtleties that make the difference, right? The subtleties allow us to understand how Grant Cardone, Vlad, and Jay Morrison can all be smart people and disagree. It's not a matter of yes or no, right or wrong. The answer to most finance questions is it depends. It depends. Let me give you an example. Let's say that I say to you, I got a Mercedes that's got pine wood interior. It's jet black with tinted windows, and it's got it's got the nicest rims you ever saw in your life. And the engine, it goes from 0 to 60 in 4.5 seconds or whatever. It's really, really fast. Do you want to buy that car? Would you like to buy that car? Yes or no? Give me an answer. Give me your answer. Yes, no, what? Who would buy that car if it's black on black on black? Do you want it? You want to buy it? It's for sale right now. Give me an answer. Okay, I see no. Okay, I see. Come on, give me some answers. Yes or no. Yes or no. Would you buy it? Okay, I see lots of no's. I see lots of no's. Now I see maybes, and I see it depends. That's the answer. The answer is it depends. Did you ask me the price? You don't agree to buy something without asking the price, right? And the reason that that's an important example I laid out for you is because that's how all investments work throughout the universe. Whether you're talking about real estate, stocks and bonds, or anything, you need to find out the price, because the number one rule of making money, or one of the most important rules, is buy low, sell high. If you sell it for more than what you bought it for, most of the time you won the game. Most of the time you won. If it's a one-dimensional game where all you're measuring is did I make money, if you sold it for more than what you bought it, then I don't care which galaxy you're in, 11 minus 5 is always going to be 6. right? There will never be a place anywhere where 11 minus 5 becomes 148, right? So at the end of the day, to say that you should never buy a home and that it's always a bad deal, that single family homes are always a scam, well, you can't say that, man. Because there are many people, millions of people who are very smart, who have bought single family homes, including my own family. My parents own a home. It's going to be paid off, and they're happy they bought their home. If you ask them, well, if you could get a time machine and go back in time, would you go buy that home? They'd be like, yeah, I'd do the same thing. I'd probably buy another one too, right? Now, other assets that you can't touch, they become a little trickier, right? Like a college degree is an income generating asset that's a little bit more sort of amorphous, than say real estate. It's not as solid, it's not as real all the time, and you see a lot more regret. You'll have, how many of you, if you could go back and trade in your student loans, hand in your degree and get the money back for your student loans, whatever you owe on your student loans, have that debt removed and get all your tuition back. How many of you would do that? Yes or no? Would you do that? Would you go back, if you could right now, and trade your college degree in exchange for complete debt relief and a refund on every penny you spent on tuition? Would you take that deal? And also, let's say that I'm gonna put a chip in your head. I'm gonna remove whatever you learned in college. So whatever you learned in college, some of y'all learn real skills. Some of y'all just learn how to do step shows. Come on now, or how to drink beer and shit. Yeah, I know plenty of people who started in college and became alcoholics after their freshman year. All right, so a lot of people would, right? Well, but does that mean that college is a scam or a bad investment? No, it still doesn't mean it's a scam or bad investment. It comes down to how much did you give up and how much did you receive. Buy low, sell high. What did you pay for it and what did you get back? What was your ROI, i.e. return on investment? If your return on investment is positive, then you look back at college, you say, yeah, I had some debt. It was 20 grand. I paid it off, but I have a degree in engineering. Now I make 130,000 a year and I'm debt free and I'm building wealth. Great deal. And I had fun, right? There are plenty of people who feel that way. But then there are plenty of other people who say, man, I went 200 grand in debt to get my degree in English literature. And now I am the smartest person working in my Starbucks. And I'm pissed. I'm angry. I feel tricked. I feel duped. Well, that's because your ROI was not adequate for you to feel satisfied with your investment, right? So to say that college is a scam all the time is just not true. I will critique the system all day. And student loan debt is crazy. Tuition costs are out of control. But I will never say that it's always a mistake to go to college. You can't say that. Okay? Y'all understand? Are y'all with me? Are y'all with me? Y'all know how I do. I do school church. We do church and we teach at the same time. So by the way, do me a favor, hit the thumbs up button. Please hit the thumbs up button. Also, by the way, if you want to support intelligent Black media as we're trying to expand, we'd love to have you as a supporter, a patron on the channel in exchange for lots of free stuff that we'd love to give you. You can go to intelligentblackpeople.com. If you'd like to do that, that's intelligentblackpeople.com. Also, if you haven't learned to buy your first share of stock yet, our goal is to get 1 million of our people invested in stocks so that we won't just complain about the building of America. We will participate in that. That's one of the keys to wealth. I will teach you to buy your first share of stock with a free training, totally free. All you got to do, just go sign up at blackmoney100.com, blackmoney100.com. So feel free to go to blackmoney100.com and get started. Bring your family, bring your kids, bring your wife, bring your baby mama and them, bring your little cousin, and get everybody in your family started, because y'all know that this is the real deal. Y'all know this. Some of y'all been watching me for years, doing this every day, and this is my gospel. This is my mission. I will give my life for this. All right, so let me move on. Let me hop into some other fine points that I thought were brought up in the argument. I didn't like the way Vlad engaged with Jay. I thought it was unfair. I also thought it was unfair when Vlad was the first one to break the story about Jay's subpoena from the Securities and Exchange Commission. So I'll go ahead and step out and be the first one to say that a subpoena is not an indictment. It is not an accusation of wrongdoing. It's basically the SEC, the Securities and Exchange Commission, trying to find out, like, who are you guys, or what are you doing? And a lot of that scrutiny, I believe, came from Black people. It came from people on the internet calling it a scam because a black man was running it. Because at the end of the day, there are millions of white guys out here doing the same damn thing, and y'all ain't nobody running around here going out of their way, bending over backwards to call them scammers. And I just think it was patently unfair. I invested in the Tulsa Fund, so I put my money where my mouth is. I know what the hell I'm talking about. I'm not just sitting here observing. I participated. I supported this black man, and I was glad to support the black man. I don't give a damn if I lose every goddamn penny. Do y'all know that there's no amount of money Jay could take from me, which I don't think he's taking from me, but even if they did, there's no amount of money I could lose investing with that black man that even comes close to what I've lost from white supremacy and racism and economic mistreatment from all of America. It doesn't even compare. It doesn't compare. Okay, I've invested in hundreds and hundreds of companies. Why not invest in the black man's company too? In fact, I should be ashamed because I didn't I haven't invested in more black companies. So I'm trying to do my reparations to my community and dig even deeper in my investment in black companies. And guess what? When you invest, you're gonna have some deals go bad. You're gonna have some situations. You're gonna have some chaos. White folks are the kings of chaos. I mean, shit. You know how much how much shit they've been in the last 400 or 500 years when it comes to money. Like, come on now. Like we need to grow up on this. This is like serious. So anyway, so just I think we should be about that life, like supporting our own if we can. Doesn't mean you support everybody. It doesn't mean you support anybody who might hurt you or whatever. But come on, I think that the amount of scrutiny we give to black businesses should not be greater than the scrutiny we give to these white businesses, primarily because the white businesses are the ones that are getting the bulk of your money. They're getting the majority of your wealth. Right, like the NFL Players Association. I don't even know why they wouldn't, put a few million into the fund. I mean, shit, y'all giving these damn these damn wealth advisors from other communities all kinds of money. All these players showing up broke, talking about I was mad because that motherfucker took all my money. I had 10 million and now I got zero and all that other stuff. Because you think the white man's ice is colder. You think he can do no wrong. He's your angel. He's the Jesus you've been worshiping on the wall since your mama took you to church when you were 3. So you really think that his shit don't stink. Well, at the end of the day, I mean, I just think it's kind of repulsive. We should be ashamed and embarrassed of the way we respond to black businesses versus responding to everybody else. So again, this is not me saying that things can't go wrong. This is not me saying that, that there couldn't be something happening somewhere that I don't know about. And if I run into something like that, believe me, y'all know me, I'm gonna talk about it. But to this point, I've seen a person in a company that has bent over backwards to be extra squeaky clean because they know that they're going to get indicted before the people even walk through the door. And I'm not a fan of that. So anyway, let me move on. Please hit that thumbs up button. You guys, on the count of 3, everybody hit the thumbs up button because we need the thumbs up because it makes people come into the live. So on the count of 3, 1, 2, 3. Thumbs up, thumbs up, thumbs up. Please hit Autumn, Layla, Justin, Eric. Everybody hit the thumbs up button. Please do that. Okay. Some other things that were brought up. Do I support Ryan McCrary? Oh, you asking me? I support Ryan McCrary. Ryan's my boy. That's one of my proteges, my homeboy from Philadelphia. I love that guy. McCrary Financial Solutions. That's the name of this company. Okay, so some of the areas that Grant is correct about in terms of things you got to look out for when you're talking about investing in a single family home, the taxes and fees. If the taxes and the fees, bank fees get out of control, that's an issue. Taxes in some areas, taxes are so damn high that the amount of money you're giving away between the interest and the fees and the taxes can actually far exceed what you might pay if you were just renting a place. Also, if the bank has an itchy trigger finger where they will take your home back in the event that you miss a payment or two, that becomes an issue. So it doesn't mean that buying a home is a scam, but there are certainly scams that happen in the mortgage industry. There's no question about that. So to Vlad's point about his security, the safety, and investing in the stock market, what I picked up on, and you can go watch the interview, feel free to check it out, is that with the stock market, the transactions costs are lower. It's a smoother process. That's why I want you guys to go to Black Money 100, and I can show you how to buy your first share of stock, because you get the little app and you just boop boop boop, you buy, you sell. Very liquid market. Transactions costs are way down. Real estate's not very liquid. Illiquid means that it takes a little more time and money to convert your asset into cash if you need need the cash. Like if you have $1 million house, you can't just sell it, in 24 hours to get money in your bank account, but you can borrow against it, right? You can get a line of credit against it. So it's not completely illiquid, but it's not as easy as just hopping on your app and selling your stocks. Okay. Now where Vlad's perception is a little biased is that, he was kind of making the argument that I stay away from real estate. I keep all my money in stocks because stocks have always done really well. And I made a ton of money in stocks. Yeah, you have, but you haven't seen all the history in the stock market. You happen to be living in an era that represents one of the greatest wealth increases in stock market history, right? This is a special time. It's like when crypto was taking off, and I was telling everybody, look, Bitcoin's doing really well, but it may not always do this well. It hasn't always done this well. Don't think this is the norm, right? So the same thing is true with the stock market. I've told you guys to invest because I've been like, oh my God, this is crazy. This is so much. Now I've analyzed the data going all the way back to, the early part of the 20th century. That's all I used to do was sit there when I was working on my dissertation and everything. And I got a real PhD. I'm not, everybody calls himself a doctor now. I noticed that everybody's doctor this and doctor that. No. I spent 10 years in school after college to get my PhD, or 9 years in school. It was a long time. I thought I was never going to get done. So I really did this stuff, and I've gone through the data, and you're living through a very unique era in economic history. It ain't always like this. So I want to make sure you understand that, because the key idea is one of the most important rules in investing is you got to diversify. You got to spread your money out. What happens is that when one sector or one stock is doing really well, people are like, oh yeah, that's my stock. I've been making money on this stock for 10 years. That's the best investment that there is. I'm a genius because I know how to invest. It builds what we refer to as a good old fashioned overconfidence. There are entire financial theories on this, by the way. Thousands of research papers written about investor overconfidence. Alan Greenspan, the former chairman of the Federal Reserve, used to refer to it as irrational exuberance, which means that you are irrational, meaning that you're not rational, and you are exuberant, you're happy as hell, which is almost like being at a party and getting real high and getting so high and so drunk that you really think that you can jump across from one building to the other because you're just feeling like Superman at that moment because you hit the weed and drank some Hennessy and you think you can do anything. Well, that's what happens when it comes to investing. People get overconfident when their stock or when their particular investment is doing extremely well. That's what happened with Enron. Everybody felt that investing in Enron was an investment in which you could not lose. But Enron suffered from what we in economics used to call, or what we still call, the peso problem. It's when everybody used to say that, oh, investing in pesos is an easy way to make money because every year the returns were super high and blah, 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 blah. And people were just putting money in and money's coming out. It was like an ATM machine. And then the peso crashed. And then you were like, oh, that's what the risk was. There was a hidden risk that we weren't aware of. And now we're all financially fucked. I'm trying not to cuss today, but I had to say it. It just came out. I'm so sorry. But the point of the matter is that a lot of times in investing, people get overconfident because it looks like easy money. And it ain't easy money all the time. People with common sense understand this. Now, Barrington, thank you for your donation. And he says, I have my 2-year-old daughter watching, which makes me feel really terrible for the fact that I was cussing. But my daddy cussed in front of me when I was 2. So that's, blame it on my daddy. Don't blame it on me. And he says, can you say hi, Maya? Hey, Maya, how you doing, sweetie? Thank you. You are a smart young lady and you have a great father. I'll tell you that. Because I'll tell you, that's what you do. You get the babies learn this stuff when they're young, and then it'll be a part of their DNA. It's like how Steph Curry's daddy, Dale Curry, gave him and his brother Steven like basketballs when they were like 1 year old. Tiger Woods' daddy gave him a golf club when he was in diapers, right? And they became the greatest in the world at what they do. That's how you create the greatest in the world. So that's how your kids, Barbara and Layla and Mary and Eric, that's how your kids, your nieces, your nephews, and the kids you mentor are going to be the greatest in the world, because you're going to get them started at the age of 2. You can get them started at the age of 1. That's what you do if you want to make them great. So anyway, moving on. So ultimately, I think that Vlad's confidence in the stock market is a little bit misguided, in the sense that there are specific fundamental economic reasons why the market has done extremely well. They go beyond the fact that the American economy has been pretty strong, and confidence in the American economy has been strong, but also easy money has been made available to the point where it's inflated the prices of certain assets in both stocks and real estate, because when there's more money made available by the Fed, meaning that people can go just borrow billions of dollars and and bid on assets, it pushes the prices up because the price of an asset is determined by what somebody is willing to pay for it. So let me give you an example. Let's say me and Barrington and you're welcome, Barrington. Me, Barrington, Layla, and Barbara are all gonna buy a house, and we have to pay for the house with the money that's in our bank account. And so I'm gonna be like, well, like I don't know. Let's say I got 5,000 in my account and I'd be at 5, and then Barrington's like, I got 10,000, right? And then Layla's like, well, I got 12,000, right? Well, the house will sell for $12,000 because there's not a lot of cash available. But what if somebody came along and said, I'll loan you up to $1 million to buy that house? Well, then suddenly I'll be like, oh, well, I'd like to pay 300,000 for the house, and Barrington might be like, I'll pay 400,000, right? So the house will go to the biggest bidder, or in some cases, the biggest fool, because that's what they call the winner's curse. When you win the auction, but you actually lost. So ultimately, the stock market's actually been inflated by the availability of easy money, and that's like almost like a house of cards, or almost like what some would consider to be a little bit of a Ponzi scheme, in the sense that that house of cards will fall at some point. Now, the reason that I don't think that's a reason to avoid the stock market is because even though that house of cards will fall, there will be a crash, there will be corrections. There are various economic fundamentals that say that there's still value in this economy. These companies are strong, they are earning money. But make no mistake about it, a stock price is a very inexact science. The equations are exact. The problem is that the variables that give you your results are not exact. So you have this really beautiful, elegant, these amazing mathematics that are laid out to value what a stock should be worth. But honestly, the information you put in is really just the best guess of the smartest guy in the room, right? So my point in all this is to say, if you want me to summarize this in terms of sort of how I would look at this, I would say that a smart investor is not going to just bet it all on the stock market. It's certainly not just bet it all on one particular stock. A smart investor is going to position assets and wealth in a lot of different places. I think real estate is important, especially for our people, because our people get something non-financial out of ownership. Ownership generates pride. Ownership generates power. Ownership generates freedom. Those are things that Black people need. We need our pride. We need our ownership. We need our freedom. We need our dignity. We need, the ability to control what happens in our neighborhood. So even if it's not the best use of your money, right? Even if you could have spent the money, you spend 200 grand buying a house, maybe you could have put 200 grand in the stock market and made a little more money. But still, the fact that you could just say, look, I'm a homeowner, I'm good. That's okay. There's nothing wrong with that, right? And in fact, I don't believe Black people should be hardcore capitalists. Black people are not meant to be white people in black skin. Black investors are not meant to be white investors with black skin. You see, capitalism has tremendous power to build strong economies, but capitalism is also very dangerous when it's done in a way that is not laced with some sort of ethical parameters that shape and mold your long-term thinking. And America ain't got a lot of ethics. I mean, shit, y'all used to take human beings and put them in ships like sardines and steal them from their families in Africa and bring them to a country they've never been to and torture them their entire lives and lynch people from trees and bring your kids to the lynchings and like it was a family picnic. Like, that's some sick, ridiculous shit, right? So capitalism is based on that. Like, we were part of the original capital. So that capitalism, in a way, kind of it does the way it's done in America is it's a soulless sort of capitalism. It's sort of like well, we have a healthcare system where if you don't have enough money to buy your medicine, then you're going to die, right? Do you agree with that? Yes or no? Yes or does that mean if you could run the economy, would you let people die because they couldn't afford their medication? Would you do that? Who would do that? Did you do it? Yes or no? Yes or no? Like, I know I wouldn't. I'd be like, no, you know what? Let's go find the richest people. Everybody's got more than a couple of $1 billion. We're going to take all the money you have, over $2 billion. So we're going to Jeff Bezos. He's worth $150 billion. We're going to take $148 billion from you because you don't need a whole $150 billion. $2 billion is, you can ball out with that, Jeff. You can do whatever you want. You can go to any strip club in America and make it rain on all them stripper thongs if you want to. So you're good. You're good. You can buy any car you want, any house you want, anything anything you want, probably any person that you want. So you're good. We're going to take the rest and we're going to use this to make sure people don't die. How about that? How about that for a society that actually makes sense, right? So I would almost say that, that for black people, as we build our nation, as we build our future economy, we need economic models that deviate from traditional hardcore gangster capitalism as is practiced in America. Money, it cannot be the only and primary motivation for everything you do. You cannot have a one-dimensional framework that shapes every decision that you make. You must understand the power of money as it pertains to your ability to achieve the things that are more important than money. Like your freedom is always more important than money because you spent 400 years not being free, and some of y'all are sick of that shit. I know this for a fact. Okay, so anyway. I'll hit this more a little bit later. I didn't intend on even talking as long as I did, but I'm gonna walk with because I gotta get back to work, guys, and I gotta fly back to Chicago. But somebody asked for the website where you can learn to buy your first share of stock. You can go to blackmoney100.com. That's blackmoney100.com. The other thing is I'll be in Chicago doing an investment seminar. If you want to learn, we have a financial Juneteenth investment seminar that we do in different cities. We're going to do Chicago and then LA in August. And All Black National Convention in Houston is in September. I'll probably do one there too. And then in New York, we're gonna go to New York in October. I think that's as far out as we set the schedule at this point. It's kind of on a piece by piece sort of thing. So if you want to come to Chicago, you can go to drboycechicago.com. That's drboycechicago.com. If you can't make it to Chicago and you want to join us on Tuesday nights at 8 o'clock for our masterclass, you can go to drboycemasterclass.com. That's drboycemasterclass.com. If you want to get half off, you can use the code word Powernomics. Use Powernomics, you can get 50% off because you're part of the podcast. And our goal is not to, hit you hard in your pockets, but we have to, we have operational expenses. So we hope that you'll invest in our company because we want to invest in you and we believe that we're giving you something of value. And if that's the case, then I hope you'll say so. I hope you'll say it here and say it to other people so that we can kind of develop models where it's a give and take and everybody wins, everybody walks away happy. And if you're not happy for any reason, we have that 30-day 100% money back guarantee policy so that there's no risk to you whatsoever. We just want you guys to give us a shot so we can wow you and change your life and make everything great for you. All right, what's that website for investing? Blackmoney100.com. That's blackmoney100.com. Somebody type that in so other people can see it. What's the other site you mentioned to get the merch? Are you talking about our financial workbooks for children? If you're asking about that, that's financialworkbooks.com. We invented a whole set of workbooks for children of different grade levels. So that's financialworkbooks.com. And also we have flashcards, financialflashcards.com. So our goal is to develop all the tools that you'll need to basically practice what we consider the Black core of 3. We believe Black people should educate our own children, create our own jobs, and support Black businesses. So we believe that you can have a university in your house. You don't need to go spend $250,000 going off somewhere else. You can keep it at home, keep it Black, and keep it within the family and build an empire right there where you stand. That's what I want you guys to do. All right, how do I feel about custodial accounts? I did a short video about that last night. If you go to theblackfinancialchannel.com, you can check out that video. Custodial accounts are okay. The problem is that you have to give the money to the child when they turn 18 and it's their money. You can't get it back. And I don't believe in giving children a bunch of money when they're 18 years old because if they're like me, they're going to do something stupid with it. If you gave me $500,000 at 18, I probably would have spent it on some girl, or you know what I mean, whatever. Like at 28 to 30 is what we're aiming for with my niece. We're gonna make it rain on her bank account when she's about 28 to 30 years old, and she's not gonna even know that the trust fund exists because I'm not trying to raise no spoiled ass kids. We don't do that in our community. At least we're not supposed to. So I'm out of here, guys. Take care. Hit the thumbs up button before you go. I'm out. I'll see you guys soon. Take care. Have a good day.